So we are currently through the massive earnings season for Q3 of 2025. And today we just got two massive companies reporting earnings, and they both crushed it, completely obliterated it. However, we're going to talk about one specific, and that is, of course, none other than the company Meta, which just blew it out of the water, guys. I mean, it was just absolutely insane. The other one that I was talking about was Microsoft, and also did really good. But Meta, oh my goodness, Meta stock rises 10% on blowout revenue gains. Key takeaways. Now they do go over some takeaways right here. I am going to take a look at the earnings summary for this. However, the article says Meta Platform stocks jumped some 10% just after posting its second quarter earnings report, where the company blew away expectations on top and bottom lines, and against the backdrop that Meta and other tech firms have been sharply ramping up spending as the race for AI breakthroughs intensifies. Revenue grew 22% year over year to 47.5 billion, easily beating the expectation for 15% revenue growth to $44.8 billion. Now, if we actually take a look at their earnings summary, we can see that Meta Platform GAAP EPS of $7.14 beats by $1.24, revenue of $47.52 billion beats by $2.68 billion. This revenue is an increase year over year of a whopping 21.6%, as we saw. And taking a look at this a little bit further, we can see that the family active people, DAP, was 3.48 billion on average for June of 2025, an increase of 6% year over year. Ad impressions delivered across our family apps increased by 11% year over year. Average price per ad increased by 9%. Headcount was 75,945 for June 30th, 2025, an increase of 7%, which is actually surprising because they were known a few years ago, I believe in 2022, to be the most aggressive when it comes to laying off people and actually hiring a lot more people, probably because of the whole AI thing, right? They do need more people in order to justify that. Now, when it comes to these outlooks, this is where they absolutely killed it. In addition to everything that we just read, it was crazy. We expect third quarter 2025 total revenue to be in the range of 47.5 to $50.5 billion, except that the consensus was $44.84 billion. They basically just took their current revenue that they just did today, and they basically made that the minimum for the next quarter, and then they just added extra $3 billion to it, completely smashing out expectations. Our guidance assumes foreign currency is approximately 1% tailwind to year-over-year total revenue growth based on current exchange rates. While we're not providing an outlook for fourth quarter revenue, we would like to expect our year-over-year growth rate in the fourth quarter of 2025 to be slower than the third quarter, as we lap a period of stronger growth in the fourth quarter of 2024. They're basically covering themselves right here. They're like, yo, in 2024, our fourth quarter, it was so good that we're probably going to see a slowdown on this. Basically, they're selling themselves short because odds are, if they do come in crushing it for Q4 of 2025, well, that just means that we're going to get a much higher price, right? Never put yourself as too rosy. Always expect for the worst, because when you outperform that, it makes you look so much better. We expect full year 2025 total expenses to be at a range between $114 to $118 billion, narrowed from our prior outlook of $113 to $118 billion, and reflecting growth rate of 20 to 24% year over year. Absolutely crazy. We're going to remember this number because we're going to do a discounted free cash flow on this company very soon. So let us jump now into my spreadsheet. We got the ticker for Meta, market cap of $1.75 trillion with a current share price of $695.21. Intraday, as you guys can see, it was down 0.68%. However, post-market, especially after these earnings, oh boy, Meta gained a whopping 11.5% post-market. absolutely bonkers, nearly $80. I think at some point this was upwards of plus $85. And if we actually take a look at this 52-week range, we can see that the 52-week high being $747.90. We are way past that right now, right? We are way past that. This is new all-time highs for Meta as a whole. Now, if we take a look at this on the 1 year, we can see that they're up exactly or almost exactly 50%. Year to date, they're up 18.75%. Now, guys, remember Meta was a company that 3 years ago during 2022 fell sub $100, and I believe at one point it fell sub $90 as well. In fact, here it is, October 28th, 2022. The stock hit a low, or near October, sorry, it's around like October, end of October, beginning of November. The stock went as low as $88.91, and a lot of people were looking at this and they're like, the stock's going to zero, it's over, they have less active users, it's done. Guys, at the time, I made a video and I'm just like, I don't understand why this is the case, because their fundamentals were still really good, like really, really good. And I said the stock should be worth roughly around, I think I said $500 to $600 or so. And, well, I guess the rest is history, because it was just a linear shot up and to the right. What happened after that? We did have a small fall, you guys can see right here, during Liberation Day, which once again, a ton of people were saying, oh no, the end is nigh. Meta falling from $736.67 down to a low of $484.66 on April 21st. A lot of people were screaming, the market's going to zero, this is going to zero, tariffs are going to kill the economy. And right now we can see that that was not the case in the slightest. So hopefully everybody took advantage of that. And if you did, let me know in the comment section below. Did you buy Meta when it fell? Did you buy Meta in 2022? That was the key one right there. That one would have been chef's kiss right there, if I do say so myself. Nonetheless, though, coming back over here, we can see that their current PE is looking at 27.16. However, this will probably be a lot higher by opening tomorrow. I'm recording this at night. The market has not opened yet. They do pay out a dividend, which they actually recently started paying out this dividend of $2.10, which means that they pay out almost $5.3 billion in dividends every single year based off of the current shares outstanding. And these payout ratios are super tiny. 20% basically for the 10-year average and 10% for the last year's free cash flow. They make a ton of money, guys. They really, really do. Looking at this dividend, this yield is, again, really tiny. They just started issuing this dividend just a few months ago. I don't even think it's been a year yet. And we can see that we really just don't have a lot of information, but their fundamentals are good enough that I don't believe that they'll cut it anytime soon, right? I just do not believe that, especially after these numbers that we're seeing with Meta platforms right now. If we take a look at the price to free cash flow, we can see that currently it is higher, which is not necessarily what we want to see. The 10-year average price to free cash flow, it is 26.89. We ideally want the 10-year average price to free cash flow to be higher than that of the current one. So this is saying that this is expensive right there. Price to sales looking at 10.26. And of course, being, they're not a tech company per se, they're more of communications, but still, their net profit margins being 39.11 is pretty normal for a company like Meta. Now, when it comes to the fundamentals, I'm not going to go too deep into this because we've covered this a lot on the channel. I'm just going to show you guys the graphs because practically all of them are just up and to the right. It really is. And you guys can see that right there with net income up and to the right, increase in the past 10 years of 1,700%. We see the same thing when it comes to the free cash flow, right up and to the right for the most part. This is up 571% in the past 10 years and averaging around $27.8 billion. Yeah, the graph just looks amazing, right? It really, really does. Next, we got the revenue, which again, it's perfect up and to the right, all except for 1 year, that was in 2022, up 850.25%. When it comes to the assets, up and to the right, liabilities up and to the right as well, but when it comes to the assets minus the liabilities, it's heading in a pretty good direction. In general, if you take their average total assets minus the average total liabilities, they're left with about $115 billion in the positive. So nothing really to worry right there when it comes to that. When it comes to now the cash flow minus the liabilities, there were instances here where they were actually in the positive, which is super rare. And you could actually argue that the reason why they're this deep in the red right now is because they're innovating a lot, especially when it comes to AI. So I don't really blame them for this. They have history where it's in the positive. I don't see this as an issue at all. And when it comes to the shares outstanding, they're buying back. They're buying back a decent amount at around 11% in the past 10 years. And previous year to the current year, a buyback of 1.05%. So with all of these graphs, y'all can tell that I like the fundamentals. I'm not going to put them a grade because it'll probably be like a 97, 98, 99, right? It would be upwards of 90, 95 plus because it is a great company. So let's just jump right into now the discounted free cash flow, because this is what counts, right? This is what we want to know if the company is worth a buy at these massive prices. So I already put in the PE and the discount rate, the WACC. We can see that for the low assumption, I put in at 20 and 11%. For the median assumption, I put at 25 and 9%. And for the highest assumption, a PE of 30 and a discount rate of 7%. Now, average revenue to free cash flow growth is looking at 32.67%. If I'm just following this and I'm assuming that in the next 10 years, Meta will grow at the same pace, well, these numbers look a little bit crazy. So let's just say for the low assumption of 30, for the highest assumption, or for the median assumption, let's say 35, and for the highest assumption, let us say 40%. So increments of 5, and we can already see that at least for the median, we're already at 1,141. For the high is almost $1,700 share price. Next, we got the net income growth. We can see that this is looking at a whopping 55.69%. I'm not going to put it at that, but I'm going to still put it very, very high because let's face it, even a little bit lower, I don't even know. Like, it's just, this is the type of company that when it comes to the growth, it's very difficult to determine. It really, really is. So I'm going to say something along the lines of like 40. You can already see where these numbers are going. Let me say now 45. Yep. 12,000. You guys saw that. And if we put 50, which is still about 6 points less than what the average net income growth has been in the past 10 years. Yeah, these numbers are a little bit nuts, right? And lastly, when it comes to the share change, we can see that they've been buying back at around 1.64% on average every single year, meaning that I am going to put the share change to be at around 0, then 1, and then 2%. So they're going to be buying back shares at around 0 and 2%. And these are the numbers. $6,000 for the low assumption and $13,000 for the median, and a whopping $30,000 for the highest assumption. So whenever you're looking at this and you're like, that is ridiculous, I agree, but I don't necessarily know what else to put, because the growth of this company could be absolutely crazy in the future, right? AI is, I don't know, right? I just do not know. But what we can do though is, if these numbers feel a little bit much, we can always go back to the sector median, and we can actually find that in Seeking Alpha when it comes, if you have the premium account. If not, I honestly think you can also see it if you don't have the paid version of Seeking Alpha. And here we have it. Now, when it comes to the revenue, I have revenue to free cash flow growth. I'm looking at this and I'm just looking at the revenue growth. I'm going to take this as it is, and we can see that the sector median, it is looking at 3.47%. And I'm fairly certain that if we take a look at the free cash flow growth, we do have this as well. We can see that the free cash flow growth per share, it is 9.6%. So somewhere in between that, I think would be fair. I know that that's the other one's per share. The revenue is not per share, but 3.5 to 9, we could put that in as at around maybe like 5%. Again, I'm just going based off the sector medians now. 5%, 8%, and 11% for the low, median, and high assumptions right there. Now, when it comes to the net income growth, for this, let's take a look at the earnings per share growth. Again, I know it's a per share basis, but it is the best that we got right here. And we can see that the EPS gap, which is earnings per share gap growth, year over year is looking at 20%, and the forward is looking at 12.73%. I think that's a little bit fairer in my personal opinion. So let's say around 10, then let's say at around 12, and then let's say at around, let's say 14%. Keeping the PEs the same, the share change the same, and the discount rates the same. Now we're getting between $634.72 to $1,200 to a high of $2,164. This to me seems a lot more fairer, seeing that we are basically going with the sector median. And a lot can happen in 10 years. You know how much is going to rain in 10 years? That's a Hispanic saying, by the way, a very Cuban saying. You know, when you expect something in the future, you're like, you know how much rain you're going to get, you know how much bad things you're going to get. So who knows what could happen in 10 years. But even with this, guys, at the median assumption, it's still looking like a great price, even after an 11% rise right now. So that is basically my 2 cents on Meta. And again, if y'all bought when this thing fell sub $100, congratulations. I really do commend you with that, because, man, you saw the fundamentals and you realized there's nothing wrong with the company, and now you're benefiting from it. So I really do hope that this video was insightful. Hopefully you guys are making bank with it. And if not, by the looks of it, we might still get some upside to it. Believe it or not, I honestly do believe that. So with that said, guys, make sure to like, subscribe, comment. Really does help with the algorithm on YouTube as well as Rumble. Make sure to follow us on X at Fatal Investing. And of course, if you like to join us on Discord, the link to that is in the description below. So with that said, peace out and have a blessed night.